Markets are. Mr. Vijay Sharma, the director at the company, is now with us. So if you would start by the sales volume did particularly well with almost 100% revenue growth compared to last quarter. Have you seen a full recovery?
Yeah, thank you, Pankaj. It's good to be here. I think the more practical approach would be to compare CPLY, wherein we have been able to do better in Q2 this year in terms of most of the key indicators. In sales, we did increase by 9%, revenue was 5%, EBITDA 3% plus, and the PAT was 35%. And it's quite encouraging. And I would like to say that we were expecting the V-shaped recovery, and the organization, because of the agility and the quick response and planning, were able to get aligned with the changing market dynamics very quickly. And yes, we are very upbeat, and we also feel that the market is going to sustain, because there are many segments which have shown a very, very good recovery. For example, like auto and utensils, there are very stable segments like architecture, building, construction, and also some new segments emerging out, health and medical care. And we are very hopeful with the new focus on the infrastructure, the sustainability would be there. So it is good, and we were able to do better, and in fact it gives a good further encouragement to perform even better.
Right, so you focus about infrastructure and spending over there. How do you foresee public spending going ahead for infrastructure? To what extent it can benefit the sector that you operate in?
See, traditionally, in the growing economy like India, stainless steel is very, very directly related with the growth in the economy. Normally, it grows by about 1.5 times of the GDP. Yes, GDP has been a little matter of concern, but the way government is focusing on the infrastructure pipeline, the huge plans of investment, which perhaps got a little derailed because of the COVID situation. So, stainless steel being the most appropriate metal and creating a very high value for the sustainable solutions on the life cycle costing basis, for the whatever solutions government is looking, whether it is a logistics, whether it is a waterways or the infrastructure, stainless steel is the most appropriate. And we are seeing it that even in the applications like foot over bridges and all, government is recognizing the importance of stainless steel. Now we need solutions which should last perhaps hundreds of years. So stainless steel is the metal which is growing more than double than the normal steel. And in India, it has been growing about 1.5 to 2 times of the world. So we are very upbeat for the future of stainless steel. But I would like to add something here. You see, India is the second largest consumer of the stainless steel in the world, next to China. Unfortunately, the FTAs, these are creating big problems. And despite of and we are rather thankful to the government of India to helping us in providing a level playing field. But the FTAs are creating a very major challenge for the Indian manufacturers of stainless steel, and as well as many other similar products as well. Just to give you some statistical numbers, just considering 16-17 as a base, in 16-17 the total import from ASEAN was about 4.5%, which has increased in 19-20 to 52%, and in fact from Indonesia, which used to be just 0.3% of the total import into India, it has grown to 42%. So there, while the opportunity is there in India, but we have to be very careful, because the competitiveness is an issue at the country level, whether it is a logistics or it is cost of capital, which makes the Indian manufacturer uncompetitive at 10 to 12%. So while on one hand we are thankful to the government of India, but we need a long-term support for the domestic industry so that we are able to align with the nation's plan of Make in India and support the growth story which the government plans. And in terms of the capacity and the capability, there is adequate capacity, adequate capability in the stainless steel industry. And in fact, when we see the analysis of import, perhaps it is less than 0.5%, which could be beyond the capability of the Indian manufacturing scene. So stainless steel industry is fully Atmanirbhar in take care of today's and future's growth of the industry. So we request Government of India for a long-term support. And in fact, in stainless steel industry, there is a big chunk, close to 40%, which is also in MSME. So for the overall growth, industry expects a little more hand-holding by the government.
Right, sir. Thank you so much, sir, for taking that time for us. Always good to get perspective from you. That was the management at Jindal Stainless. Sounded quite optimistic about the volumes. But one of the stock of the day,